Hello and welcome to AI Market News by LM. Wow, what a week it's been. We've seen a massive reversal across global markets, as a huge wave of uncertainty has just completely flipped the recent optimism on its head. Let's get right into it and break down what's been happening. You know, it's amazing what a difference a day makes. We had this massive rally after NVIDIA dropped some absolutely stellar earnings, but that excitement, it just evaporated almost overnight. Now, a real sense of anxiety has taken over, turning what was a risk-on environment completely upside down.
So, here's our roadmap for today. We're going to start with how the story around AI is changing. Then, we'll see how that's hitting US and global stocks. After that, we'll pivot over to the currency markets, especially what's happening in Japan. Then, we'll take the market's temperature with some key indicators. And finally, we'll look at what's on the calendar for the week ahead. That party after NVIDIA's results, well, it came to a very abrupt end. The whole conversation has shifted. I mean, it's not about the massive demand for AI chips anymore. We all know that's there. The real question, the one everyone is asking now, is about the return on that enormous investment. And this right here, this really gets to the heart of the matter. The market is now looking very closely at the big spenders, companies like Oracle, who are just pouring billions into AI infrastructure. Investors are starting to ask, okay, but where's the payoff? And it's that skepticism that's really fueling this big sell-off. So this AI anxiety didn't just stay in a neat little box. Nope. It translated directly into one of the most volatile sessions we've seen on Wall Street all year, and it ended up dragging global markets right down with it. This number here, this is the VIX, which people often call the market's fear gauge. When you see a spike above 25, like we're seeing here, it's a huge signal. It means investor nervousness is way up, and people are rushing to protect themselves against more potential drops. And the damage was, well, it was everywhere. The tech-heavy NASDAQ had one of its biggest intraday reversals since 2021, a massive 5% swing from its high to its low. And of course, the S&P 500 and the Dow also closed deep in the red. It was a tough day all around. And this wasn't just a US story, not at all. Global stocks are on track for their worst week in 7 months. That MSCI World Index is down over 3%, which just goes to show that investors all over the world are hitting the brakes, de-risking, and pulling back from stocks. Now, this turbulence wasn't just confined to stocks. Over in the foreign exchange markets, all eyes were on Japan. There's a mix of government policy and market pressure that has created a really tense situation for the yen. What we're seeing here is a classic conflict. On one hand, the Japanese government is getting ready to roll out a massive stimulus package to give the economy a boost. But on the other hand, the market is getting worried that all this spending could destabilize the country's finances. And that fear, it's pushing the yen down to multi-month lows against the dollar. And right on cue, we start hearing this familiar language. Japanese officials have started what's known as verbal intervention. They're trying to talk up the currency, warn speculators to back off. The key takeaway here is this is a clear sign that they're uncomfortable, and it raises the real possibility of them stepping in directly to support the yen. So with all this volatility, it's really useful to just step back and look at the actual data that measures the emotions driving these moves. It helps us see just how quickly sentiment can go sour. So the big question is, can we actually quantify this sudden change from optimism to pessimism? Well, yes, we can. Let's look at 2 key indicators that give us a really great data-driven view of what investors are thinking and feeling right now. First up is the CNN Fear and Greed Index. You can think of it like a mood ring for the stock market. It pulls together 7 different indicators, things like market momentum and volatility, and boils it all down to a single score to give us a snapshot of whether greed or fear is winning the day. And just look at this rapid shift. A week ago, the market was at neutral territory. Before that, it was actually greedy. Now the index has plunged to a score of 30, which puts it firmly in the fear zone. This is a crystal clear, quantifiable measure of the risk-off mood that's taken over. Next, we have the CME FedWatch tool. This is super important because it shows us what the market is actually betting on for future Federal Reserve interest rate decisions. It's basically a real-time gauge of market expectations. And what we're seeing is that after that mixed US jobs report, traders have seriously scaled back their bets for a rate cut in December. The market is now pricing in a 92% chance that the Fed will just hold rates steady, which reflects a whole lot of uncertainty about where the economy is headed. Okay, finally, let's look ahead. We've got several key economic reports coming out next week that could either calm the market's nerves or, add even more fuel to the fire.
Based on the schedule from investing.com, we should be paying really close attention to the U.S. Services PMI and consumer confidence data early in the week. Then, on Friday, the EU core inflation rate is going to be a big one. These reports will be absolutely critical in shaping what we expect from central banks on both sides of the Atlantic.
And that leaves us with the million-dollar question for the coming days, doesn't it? After a week that completely shattered complacency, the market is desperately looking for some kind of direction. The next round of data is going to be absolutely pivotal. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.